The stock market might be booming, but why is no one talking about how US bankruptcies have risen at the fastest pace since the 2008 Great Financial Crisis, jumping by nearly 40% year over year in 2024.
And bankruptcy filings in the United States continue to rise.
As Spirit Airlines has filed for bankruptcy.
Big Lots, it has filed for bankruptcy and the shares are tanking.
At a Red Lobster, it has officially filed for bankruptcy.
Especially because you expect bankruptcies during a recession, but not during an expansion, which means that something they're telling us about the current state of the economy isn't adding up. What if an economic crisis was brewing right in front of us all along, as illustrated by the growing number of companies on the brink of insolvency, representing just how close the entire system is to crashing, threatening not just the stock market, but all assets inside of the system. Today, I'll expose the truth about these companies, the risks that their failures pose, and how they could directly impact you. But first, ask yourself this: given everything that's happened in the last couple of years, why is the stock market growing? How is the economy growing? Is it truly real fundamental growth, an innovation in product and design, strong consumer demand, or is it central bank support, an overprinting of the dollar that has led to a boost in valuations with no real growth? Further, spurred on by speculative growth, aka market hype or investor optimism, both of which can lead to asset bubbles, such as the dot-com bubble or the housing bubble before the Great Financial Crisis. Most people can feel that something is off, but they don't know what. You've probably had this feeling before too. And the truth is, the market is increasingly reliant on a small handful of stocks, a concentration of stocks, to account for all of the gains that have happened in the last couple of years, because there isn't enough fundamental, real growth going on, leaving many people vulnerable to even the slightest dip or decline, especially given the rising number of zombie companies, or so-called zombies, companies so burdened with debt that they are barely alive. Companies that can only afford to pay the interest on their debt and are one small misstep away from dying for good, meaning they are unable to create any real growth or economic contribution, existing only to fund Wall Street and big banks, all while on the brink of collapse. And they are aptly named zombies because their numbers are growing. In fact, 43% of the Russell 2000 or small cap companies are now considered unprofitable. 43%, the highest amount since COVID, and more than double the amount of 2008. As the number of zombies has grown, so too has the risk to the banking sector and the overall economy should these companies be forced to file for bankruptcy, which is looking more and more likely if rates stay where they are today, especially after these companies got so used to the era of easy and free money. This causes a serious situation for companies that refinanced in the hopes that rates would come down, because they don't have the capital to stave off these closures and time is running out. Hence, the growing number of bankruptcies this year alone. George Cipollone, a manager at Penn Mutual Asset who studies these companies, said, and I quote, "At some point the money comes due and they're not going to have it. It's game over." And just because these companies are barely alive does not mean that their failures doesn't come with real-world consequences. Zombie companies employ millions of people across America, and when they fail, people lose their jobs. Where are all of those new jobs coming from? Investors who are unaware lose everything, and of course, there's a spillover effect into the economy as it becomes increasingly harder for companies to raise new capital. This is especially tragic because many of these companies have put themselves in this position by spending on buybacks of their stock instead of investing in technology and progress. But it's not just zombie companies that are guilty of this. Regular publicly traded companies are opting for exec cash outs now. A famous example of this being Bed Bath & Beyond, who opted for stock buyback and heavily borrowed so that their top execs could walk away with hundreds of millions of dollars in payouts, all while the investors watched the share go to zero and tens of thousands of people in all 50 states lost their jobs as the company closed its doors. Once again, proving that we live in a system that was not designed with us in mind. The wealthy elites are squeezing all of the juice out of the system that they can, but time is speeding up. We see it with the rising number of bankruptcies, these zombie corps who are going to be unable to pay their debts, and a market concentration not seen since the 1970s, a period of time when we experienced rapid inflation, all proving that there is an economic ticking time bomb set to go off. And when it does, there are many who are going to be caught unaware. Now, the wealthy elite, they've already used this opportunity to make themselves richer. They know what's coming. But for the rest of us, many will be left with nothing. The only way that people can truly protect themselves is by making sure that you are protected outside of the system before the next crash happens. If you're watching this and you're nervous about what I'm talking about, chances are you do not have your strategy in place. If you're watching this and you can sleep peacefully at night, then you most likely have your insurance policy in place, which for me is physical gold and silver. This is because gold and silver doesn't have a greedy executive. It can't go bankrupt, and it's not at the whim of other people's corrupt choices that are outside of my control. See, when you don't hold it the way you can hold physical gold and silver, you don't own it. You have the illusion of ownership, which can be taken away from you and broken at a moment's notice. Unlike physical gold and silver, which we like to call your insurance policy. But your insurance policy is only as good as the time you get it. If you wait to get it until after the crash, then it doesn't do you any good. You need to be prepared ahead of time. And while I'll never tell you what you should do with your finances, if you look at the big picture of what's going on today and what's going to happen tomorrow, it's clear that it's not going to be pretty. And that is why I truly believe that everyone should be protected today. And if you're concerned about any of this and you don't know what to do next, or you want a second opinion, that is what our team is here for. You can call us at the number below. You can click the Calendly link in the description. Just make sure that you are taking this seriously, because again, too many people look back and think, I wish I had done something about it when I had the chance. And as always, I so appreciate you being here. My name is Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.